All right, my name is Chris Sachinelli. I get to build, buy, and sell simple profit businesses every single day. And today we're going to be talking about building your investment thesis, right? So if you are on your own build, buy, sell journey, then one of the places in which you start, right? Everything starts somewhere. One of the places in which you'll start is to develop your own investment thesis, right? So taking into account that you already have kind of like a foundational and experiential understanding of what this build, buy, sell world is, one of the first places you put your foot down or your best foot forward is to get into building and developing your own investment thesis, right? It's a good, healthy activity. It's also, because it's so submersive in terms of an experience, it also is a great process in terms of learning, expanding, and growing, right? It also experientially puts you in a position in which you can start to have ideas, develop ideas, and then share those ideas outwardly and get feedback, which is a great place to start, right? So again, my name is Chris Sachinelli. We do build, buy, and sell simple profitable businesses every single day through Bootstrapper Capital. So what I'm going to do in today's video is actually just share with you what I did, right? So this is my journey building an investment thesis. It is also kind of like simplified down, to best practices that probably anybody can just pick up and run with, right? But we do buy, build, sell, and repeat. So that's the goal here. Is you want to get into the build, buy, sell game. You want to be able to find acquisition targets, companies in which you want to acquire or make investments into, and then hopefully incrementally grow them over time by building wedge equity, right? The wedge equity is the difference of value between what a company's worth, the start to the finish, the thing in the middle, that's the wedge. And by buying low, building wedge, you are positioned to hopefully exit higher than what you acquired for, invested in. And hopefully that's how you make money at the end of the day, because that's what this game is in terms of investing, right? So everything starts somewhere. When it comes to building your investment thesis, the first thing that you need to start with is yourself, right? So you need to inventory your own personal why, right? And if you can get really close with your why matters, because your why at the end of the day is what gets you up out of bed. That's what gives you the drive. That's what gives you the energy. That's what gives you the grit to be able to grind, right? Because none of this stuff is easy, right? First and foremost, none of this is easy. We already know that life is a very real thing. It's not easy onto itself. Getting into the build, buy, sell game is another level of complexity on top of what is already a complex life, right? It is not easy, but it can be simple, right? Simple is not easy, but simple works. This investment game can be simple, but it's definitely not easy, right? So you got to know your why, right? That's why we lead with the why. It gives you that purpose and intent, right? The intentional purpose to be able to drive things forward. And a great place to start is to ask yourself, so like about me, like what are my what are my skills, abilities, and traits? Like what's good about me? What do I enjoy and appreciate the best, the most, right? What did I dedicate or put in my 10,000 hours, right, to sharpen my axe to become the best at, right? Inventory that. Just like take some time, like take some intentional time, and there's no rush in any of this. Like that's another part of the investment game is, if you do it the right way and you take this investpreneur's approach to it specifically and especially, and you buy yourself time, there are no called strikes in investing, meaning like you don't have to swing at every pitch. You don't have to make make an investment in every deal that comes across your desk, right? You realistically can be very intentional, very selective, and take your time. This is a time game. You really just want to make sure you don't lose money, right? That's rule number one. Forget rule number one. Rule number two, just go back to rule number one, right? There are no called strikes. So take your time, take some intentional time, inventory your why. Really reflect on yourself. Like, what are you good at, right? Where are you a subject matter expert? Because once you get into deals, you're going to want to be able to add value to those deals, right? So are you good at marketing? Are you good at sales? Are you good at operations? Are you good at finance? Are you good at human resources? Are you good at technology and IT and development? Are you good at legal, right? Compliance? Like, what are you good at? That's also why with entrepreneurship, we say, go get a job, get somebody to pay you to get experience, take all that experience, some of that pay, go build an asset on the side or buy one, right? Get your asset to match your income, then go level up. You need experience, right? So this is an experiential game. You got to understand where you can add incremental value. And then you got to attack that, centralize that, right? Not only is it like what you can do really well, the other question you got to ask yourself are, what are you the most passionate about? Right? Like, what are you going to be willing to wake up every day and research? Like, jump on YouTube and go down the rabbit hole for hours. Like, read and digest articles and give feedback and participate in communities and dive deep. Like, what juices you? What's a tank filler, right? So you want to know your tank fillers, and you also want to inventory your tank emptiers, and then you want to list out your tank fillers, right? So you want to know what you're the most passionate about, specifically in terms of like subject matter expertise, like what types of businesses, what types of areas of focus, right? Where does your attention and interest lie, right? You want to take that list, you want to take your skills, abilities, and trait list, and you want to see where they overlap, right? So that's realistically, and I mean, foundationally and functionally, that's probably, you know, for most folks, enough. That's probably good enough to build an investment thesis. I probably could end this video here, but that's how important the why is, but at the end of the day, even though it's a great place to start, there's a little bit more work to do. So once you've identified this overlap of skills, abilities, and traits, and then also interests, now I want you to go and actually put in the hard work and research the market, right? I want you to conduct a really thorough research on the industry, the market trends, right? And like what types of investment opportunities are out there. For example, with Bootstrapper Capital, right? Like, spend a significant amount of my time in my life building simple businesses, specializing in B2B, specializing in B2B SaaS. I built companies, I scaled companies, I invested in companies, right? I worked in organizations, I helped optimize organizations, especially from like revenue side, throughput side, removing of constraints, right? Getting to operational efficiencies, ultimately, realistically building Wedge, right? But when I saw that, I knew that that's where my skills, abilities, and traits lived. I also know, so building Wedge equity realistically, I know where where my experience is, where my interest is, B2B SaaS, etc. Then I ultimately went to the market, and when I was getting back into the build buy sell game, specifically around Bootstrapper Capital, there was this market trend, and the market trend was like micro SaaSes, like micro companies. Like micro SaaS very quickly became just like micro business and like micro equity, and I was like, man, there's this thing that's on trend, right? I know how to do all of this stuff. I've done this at large organizations. I've done it for myself, right? For all of these reasons and probably more. I could definitely do it for others and build a good business that could, ultimately bootstrap $100 million portfolio 100% in public. I think I could really do this, right? So that became my kind of thesis. And then I started to research it. There was this advent of all of these micro exchanges. Like we had listed, we launched our own to kind of test and understand the market, see what deal flow was like. We then designed our deal structure, our safer, right? We went through this very intentional process, and a lot of it was below water. A lot of it was going out and getting market feedback, and a lot of it was just research, right? In-depth research, both experiential, like high-level research, just like face value, high-level research on Google, on the news, then also experiential research, like doing it, right? Like a lot of my research became taking action and then learning and researching through action and having conversations. We led with, I recorded like 50 to 100 podcast interviews with potential folks inside this target market before I ever even did anything. I never even dropped that content, right? So like we're talking like really intentional actions to be able to develop the thesis. And then once you develop that, once you do that research, you want to develop your thesis, right? So based on your research, you want to develop your clear investment thesis, right? So for us, the go-to-market thesis was we want to target micro equity transactions, B2B space, right? Definitely sub 2 million, but realistically, we were focusing on deals even smaller than that, right? We wanted to focus on companies that were doing like a couple $1,000s in monthly recurring revenue, because and realistically, even before that, it was a few $1,000s and then like 30 or so customers. So there's proof of concept in market, right? Like I wanted to make sure that there's a product. A lot of expense comes into developing and designing and building product, right? That's why it's easier to buy companies too, right? A lot of cost is in the product development. So I wanted there to be a product in market. I wanted there to be customers. I wanted to be able to analyze and interpret, the quality of the product in market, and identify in that process like areas for improvement. And the areas for improvement became the ability to build Wedge equity, right? Wedge equity is the ability to grow the incremental value of a business, right? So the goal when acquiring a company at all times is to always make it more valuable right after you invest than what it was before. Invest low, buy low, sell high, right? For the most part, that's typically the way that you want it to be. So I had this thesis. A lot of my thesis became like, where was the market trend? Where can we find the best deals, create the most value, and build the best wedge fastest, right? And that's why we focused on, the deal flow that we initially did off of like what was micro acquire, now acquire. We also integrated our own aggregator in terms of a deal aggregator to be able to integrate and aggregate deals from other, micro sell listings, buy sell listings. And we focused on virtual remote opportunities, right? We didn't want to deal with hard assets, hard liabilities. We wanted to do quick asset based sales. So there's a very clear thesis around it. And then as we dove into that thesis and we started to specialize and focus and execute, we were able to advance it and move it forward, right? So it should be very clear. And then once it's clear and defined, you should be willing to develop it and move it forward, with market norms and with experiential learning, right? So I want you to develop your thesis, and realistically, that is around like, where are you going to invest your money, right? You can make this simple, right? There are, if you go to Google and you like Google search like template for investment thesis and stuff like that, there's like fairly sophisticated templates out there, and I think they're overly complicated. You could easily make this like a one pager in terms of like, keep it simple, right? You just want it to be simple. You want it to be clear. You want to know what you're doing, what your strategy is, what your goals are, like where your deal flow is coming from, right? Once you have that, the goal is to then share it with others, right? This is where some folks get caught up. They don't take action, right? All of this game comes down to taking massive action. You got to just be willing to take a lot of action. You got to go out and just do it, right? You can't just paralysis by analysis type of thing. This is like a very important part and point, because in doing this build buy sell game, making investments, all this stuff, it's kind of scary to a lot of folks. It's outside of comfort level. And like concept of paralysis by analysis, like let me overanalyze, let me overcomplicate right before I take any action. There's a lot of reasons why that could be the case and that could play out. Just go do it, right? And one of the easiest ways to go do it is to just share it with others, right? So take your investment thesis, share it with some other people, and then figure out like, is there a market fit? Like earlier, what I did is I had my thesis, I went pitched it to my kind of like my personal network. Then we actually launched a venture scout program. So I had other people that were kind of interested in this game of like finding and identifying deals. I pitched the thesis to them, got them involved, got the feedback, experiential feedback there. I then went out and did this podcast circuit where I interviewed like 50 to 100 people, and in this process was validating, vetting, qualifying the deal, the thesis, the investment thesis. And then we went to the market and we started building deal flow. And then I started to qualify the thesis even further, narrow it down, understand the market experientially, right? So like we had a really intentional go to market with our thesis to be able to get to where we are today. And it took a ton of time, right? Like that's like years, right? Like that's like years in the process. And this is after like I already built companies, I already exit companies, right? I already ran accelerators. Like this is like numerous like experiential career shifts later of having like earned it, right? So first I did it for myself and I earned all this stuff. And then once I realized that I wanted to get, into the buy sell game and do what we're doing with bootstrap capital in the portfolio and advance it forward in this way, specifically through like this community first model, build a public model, right? Do it in the way in which we're doing it, bootstrapping the business. By the time that it landed there, we're talking like that process, took years after all of the other hard work, right? And that's like doing it without anybody knowing, right? That's doing it without any accolades. That's doing it without, getting paid to do it. That's doing it just, again, following the why. And that's why the why is so important. You got to be able to get up and show up every single day. You got to be willing to put in the hard work when nobody even knows that you are. You got to be able to do it for the right reasons and commit to the process, right? Trust the process, commit to the journey, right? So when you're sharing it with others, you're thinking about these things. You're trying to listen and pay attention. You're trying to figure out like where people are throwing flags, specifically, ideally around risk, right? So listen to the market, listen to people, listen to your peers, listen to everybody. You don't have to do what they say, but you have to listen, right? So that you can pay attention, so you can optimize internally. This is your accountability, right? But you need the feedback of others. You need to have these feedback loops. So like identify where folks' eyeballs go and minds go towards risk and identification of risk. Humans are like super risk adverse by nature, like survival, I guess, evolution of survival. So like folks typically drift towards risk. So it's like let folks crowdsource where the risk is and then come up with a strategy that mitigates that risk, right? Investment game is all about mitigation of risk. You want to mitigate as much risk as humanly possible. Your thesis and what you're doing should truly mitigate a ton of risk. I think one of the special things that we do with Bootstrapper Capital is we have like such a awesome, not only deal structure, I think our deal structure, proprietary deal structure, which again was earned, right, through the hard work. Not only do we have an amazing deal structure, we also have an amazing business system that helps mitigate risk. Almost everything we've done intentionally helps mitigate risk and helps prolong the longevity of us doing this, right? Prolonging longevity, it gets you into the position of maximizing return. So mitigate risk, maximize return. That's what your investment thesis should really be focused around, ring fencing around. And then you got to be able to say, can I source quality deal flow, right? Can I get the deals that I'm actually looking for, right, to feed my thesis? And then when I do and I convert them, can I actually deliver? Go back to, again, your skills, abilities, traits, your working infrastructure, your working, right, factors of production of doing this business, of investing in others. Can I deliver value? Can I deliver incremental value? And it's like, if you're only making one investment, it's a lot easier to deliver value in one thing than it is like what we're doing, which is like hundreds to thousands of deals, right? So you need a totally different infrastructure for one versus the other. So you got to ask yourself, can I do this? And if not, how? How do I? How do I fix for it? How do I solve for it? Or do I accept the fact that I can't? And then once you know that you're going to be able to do and deliver, find, deliver, then you got to eventually exit. So you got to have an exit strategy. And a part of your investment thesis should also include your exit strategy, meaning like, how are you going to get your capital returned to you? Or if you're taking on investors and you're taking on outside capital to be able to do this, how are you going to return their capital, right? Whether it's debt or equity, right? So you got to have an exit strategy. I need you to have an exit strategy of like how you're getting to liquidity. I mean, that's why we promote heavily, like always be capital ready, right? A lot of, building the wedge or getting, capital ready is around building wedge equity. And tied to that is, higher valuations, right? Better, terms on investment, higher multiples, all those things, because the exit does matter, right? At the end of the day, that's your culmination becomes your thesis. You write it down, you document it, you simplify it, you put it in a deck, right? You realistically have to share with other stage. This is just should be deck ready form. And then you're continually going back and you're just repeating these processes, right? You're continually developing your thesis. You're continually researching the market. So like work your way through and then work your way back, right? You're continually asking yourself, is this right for me? Right? Am I following my why? Is there a better path forward? Is there a clearer path forward? Because the stronger that all these things resonate, the better your thesis is going to be. The better your thesis is going to be, the more actionable your plan will be. And then hopefully the better the returns will be for you as you go to market.